Hello, good afternoon, and welcome to HYCM's FX Week Ahead live market analysis with myself, Giles Coughlin. Apologies for the slow start. There were some technical issues at our end, and I think they've all ironed out now. Okay, so just check that you can hear me okay as I'm coming in. Just saying hello to folks. Let's see who's there. Hi, Lolu. Just as folks are coming in, I think you could hear me okay. So if you've got any problems hearing me, please do let me know, and we'll go through what we're looking at for this week. We're a very interesting week ahead in the market, so there's plenty for us to look ahead. Just as we're going through, just make sure that you're aware that the whole point of these FX look ahead webinars are to do with making sure we understand why the market is moving in the direction it is. So what this isn't, it isn't a signal service.
Just be aware of comments from NEC director could look.
It's not a signal service where you get entries and signals to follow. This is all about education and trying to understand for yourselves by looking over my shoulder, as it were. You see how a professional trader goes about analyzing the markets, so you can begin to learn for yourself how to best understand currency movements, and then of course you can then make your own trading decisions from that. So that's the way it works. If you've got any questions during the webinar, please just pop them in and I will answer them there. If you've got any trades you're looking at, anything like that you want me to go over, very happy just to go over that information with you guys. And that's the introduction over with. So without further ado, we can get into the seminar properly. Now, the first thing for us to talk about is the Brexit latest. Now, Brexit is at a really crucial moment now, and the pound has been bought this morning and in the last few days of last week, basically on optimism that PM Johnson is going to be able to get his Brexit deal through Parliament this week. And the risk appetite is on in early trading this week, and we've seen US dollar weakness driving the major pairs. So let me just show you some of that here. I'm just going to drag a chart across and show you what I'm talking about there. So let's look at the pound US dollar pair, and I'll just show you what's going on with the price action on the pound. Now, when we look at the price action on the pound, you can see that there's these two big overhead resistance and support level here. 1.2839, it's the October 18th lows, and we've got that 1.300 highs. If you go to the daily chart, you can see that that's a very key resistance level. You can see the pound is just trying to break out of that level, and the pound is being bid that somehow that PM Johnson is going to get his deal through this week. Now, the latest update we have the Speaker of the House of Commons called John Bercow is giving a statement today at 3:30. And what John Bercow is essentially going to be saying is whether PM Johnson is allowed to have another meaningful vote today. So if John Bercow says yes, Johnson is allowed a meaningful vote today, then I expect the pound to instantly rally on that news. If John Bercow says no, PM Johnson isn't allowed a vote today, I expect the pound to sell off. But there will be a vote tomorrow a meaningful vote tomorrow on the withdrawal bill. So what I'd expect to see is something like pounds selling off and then bought back up in anticipation of tomorrow. So I think the term for this is, at the moment, I think the risk for the pound is what they call asymmetric. So I think no matter what happens this afternoon, obviously there is an exception, I'll go through that in a minute, but it looks like the pound is going to be bid into today. Now, there is an exception. Say the withdrawal agreement bill is going to be voted on tomorrow, and say there's an amendment that's allowed for that. Say John Bercow allows an amendment. Now, some of those amendments could make the deal unattractive for some key voters for Johnson, and that would be negative for the pound. So then you were looking at a second referendum or a general election. and that potentially could move the pound in a different way. So, we should know by, I think 3:30 London, it's 3:30 GMT time. I think we're going to know, which is 2:30 British summer time. So in the next sort of hour or so, we should get some information from John Bercow when he's going to allow the vote. So what I'm expecting, if he allows the vote, pound positive. If he disallows the vote, initially pound negative, but then I expect the pound to be bid because the withdrawal agreement bill will be voted on tomorrow. So the difficulty thing with the Brexit scenario is that each step there's a whole new range of potential triggers for the pound. So it's one to keep reading up on, to keep ahead of what the latest moves are. And there's quite a lot of news flow been over the weekend. Obviously on Saturday there was meant to be a Brexit vote, and it wasn't. It was postponed because of a key amendment that was voted on. So PM Johnson said, well, there's no point having the vote, it would seem. So there's a lot of flux with the Brexit, but that's the key thing to look for the next couple of hours. That's the key thing. Bercow, if he accepts allows the vote, pound's going to rally. If he doesn't allow the vote, pound should sell off, but then I expect it to be bought back up because the withdrawal agreement is going to be voted on tomorrow. But then if the withdrawal agreement is voted on tomorrow with some crucial amendments, those amendments could mean that the chances of the deal going through suddenly become less. So it's three key factors to really keep looking on for that. And so we saw risk appetite on in early trades. So if you look at the US dollar Swiss franc pair, we saw dollar weakness this morning. You can see that dollar weakness. We've also seen euro US dollar. We've seen dollar weakness in early trading. Obviously, it's the start of the week, so so there's dollar weakness, pulling back a little bit now, and we would have seen the US dollar is a bit tricky, Japanese yen pair, because sometimes it moves on risk sentiment and sometimes it moves on sort of risk on and trade development. So at the moment this morning, the thing that was dominating was the yen weakness. So that was dominating the US dollar Japanese yen pair and US dollar CAD, and we saw some US dollar weakness on the US dollar CAD pair. So broadly speaking, it's US dollar weakness that is characterizing the markets at the moment. So that's why we've got this risk appetite. Risk is on. Just have a quick look at the equity markets. In the equity markets, we're looking at S&P 500 futures are up 0.29%, FTSE's up 0.2%, DAX is up a full percent. Overnight Asian session was good, plus 2.5% for the Nikkei. The Hang Seng just finished above flat at 0.02%, and the Shanghai Composite just up plus 0.5%. So there's gentle risk on tone in the market at the moment, and it looks like that's going to flow through into Wall Street in the open in about 45 minutes for the cash open. So just to be, that's sort of where we're at this morning. These are the key things we're going to look at. We're going to look at key events for the pound. We sort of covered the pound. We're now for Super Saturday. We're waiting on John Bercow, who will be speaking in the next hour and a half. We've also got some key euro data, key Canadian dollar data, and risk trades potentially for US-China phase 1 trade deals. So that's some of the key issues that we've got coming up. So let's turn to the calendar and let's see what we've got. Now, the event for today, it's mainly Brexit related. That's going to be the key issue, and waiting for John Bercow at 2:30 GMT time, 3:30 British summer time. The next data on Tuesday that I'm interested in is the core retail sales and the business outlook survey. Now, the key thing, let's look at where the Bank of Canada is. Now, the Bank of Canada is the only central bank that hasn't turned explicitly dovish, okay? And the market, for the last few weeks has just sort of been waiting for the Bank of Canada to turn dovish, waiting for them to give market participants an excuse to say, okay, we want to sell the Canadian dollar, because the sort of belief was like, well, why should the Bank of Canada be the only central bank that hasn't cut interest rates? Why is it doing so good? So the expectation was the bank would just follow the other world central banks, follow the Federal Reserve, follow the RBA, follow the RBNZ, follow the ECB, follow the Bank of Japan. Why was the Bank of Canada not doing so? Now, the data that's come out over the last sort of 3-4 weeks has been mixed, okay? So some of it has been pretty good, some of it has been not so good. So there isn't a clear theme at the moment, okay? So the latest inflation data was okay, it's 1.9%, which the common, which is about, just below the Bank of Canada's 2% inflation target. And we had some retail sales which were negative for the Canadian dollar. Last retail sales reading, and the GDP reading was a bit flat. Now we've got retail sales coming up again. Now, retail sales is important because retail sales feed straight into GDP. So this figure will impact the GDP figure. So it's important. We also have the Business Outlook survey, because the Bank of Canada, this is a very good survey, because the survey is pretty broad. It has a lot of evidence on hiring intentions, production growth, expected production growth, capital expansion plans, inflation expectations. It's a good survey, and the Bank of Canada pays attention to it. So we've got these two data points out. So really what the Bank of Canada is looking for, well, the traders rather, are looking for a clear picture. So we're looking for something that suddenly shows the Bank of Canada is going to go one way or the other. Either the data becomes so strong that it's really justified for the Bank of Canada to maintain its kind of on-hold basis, or it's not becoming dovish, or the Bank of Canada needs to have some negative data that comes and say, yeah, okay, they're almost certainly going to change, and they're going to stop being bullish. They're going to stop being on hold, and they're going to adapt a sort of dovish basis, which of course would cause the Canadian dollar to weaken. So these two data points are key this week, okay? So what we're looking for, and this is something we're talking about, I'll be teaching about at the end of this month in Dubai. It's about sentiment shifts, how to identify and recognize sentiment shifts. So we've got the baseline. The baseline for the Bank of Canada is it's on hold, but the market would really like it to turn dovish, okay? So if we get some clear dovish sentiment come through these two data points, I would expect the Canadian dollar to sell off, okay? So for example, a good currency pair that I'd look to pair it with would be the Australian dollar, Canadian dollar currency pair. We know the Australian dollar has been bid in the last few days because there was some really good employment labour data. We know the RBA focuses on labour data. We also saw some bullish comments from Governor Lowe, who was kind of against negative interest rates and was quite happy with rates where they are. And the markets saw, after Governor Lowe spoke, they thought, there's very little chance of a rate cut at the next RBA rate meeting. So the Australian dollar has been bid recently. So if we see some negative readings here for core retail sales and for the Business Outlook survey, then I would look for a potential Australian dollar, Canadian dollar long, okay? We've also had the Australian dollar being supported on positive US, China, and positive Brexit developments, which is just boosted the risk tone. The recent sentiment for Brexit has been positive, right across the board. So what we're looking at now is these two. Now, if we get a negative sentiment, if we get negative sentiment, I want to trade it against Australian dollar Canadian. So if these are poor, if that's a poor reading, I would go Australian dollar, Canadian dollar longs. Apologies for the confusion there, because that would result in Canadian dollar weakness. Remember, the market sort of wants the Canadian dollar to be weak. Now, if we get these readings very strong, then maybe pair it with the euro, because the euro is probably the most bearish currency at the moment. So you could look at a euro Canadian dollar, short would make sense there, because if suddenly the market says, well, actually, the Bank of Canada, they're doing well, and the retail sales are picked up, and the outlook survey is good. There's no reason for the Canadian dollar to be continually sold off. So really, for me, for something that's a tradable sentiment shift, I've looked for both of these in the same direction. So both of them bearish or both of them bullish. If it's really good data, then I'm looking at a euro Canadian dollar short. If it's really bad data, then I'm looking at Australian dollar, Canadian dollar long. That's the currency pair to look at. For Thursday, okay, the risk here for the euro is to the upside, because data has been poor for manufacturing and services, and the outlook for the euro has been quite down now for a number of weeks, and the euro has been sold off. It's probably the most bearish currency. So look at this manufacturing data for Germany. You can just see how this is going down to. So let's see how far we can go on this. Yeah, you can see, look, the last manufacturing data out of Germany was the lowest since like 2009, the financial crisis. So, the euro is very well sold off. So the risk here is, say you get a sudden uptick. So say we get a sudden pickup in French manufacturing. And don't forget, this is all linked to the US-China trade deal as well, because German manufacturing has been affected heavily by the US-China trade disputes. So you've got to factor that in. Where are we with the US-China trade deal at the moment? So the risk, in my mind, is to the upside. There's also got monetary policy statement, refinancing rate, expected to be on hold to keep rates as they are. Again, obviously, if there's a surprise, and there could be, because the board members have turned more dovish recently, then you could easily expect a surprise rate cut. That wouldn't be the biggest surprise, and the market isn't expecting it. But looking at the board, you can see that the board is really quite dovish members. We had a hawkish board member who resigned recently, so you put that all together. We got we've got risk both ways with the euro this week. So that in a sense, you've got to keep the expectations. You got to know what the baseline is, and the baseline is if it's just kind of on expectations, then I'm not expecting anything. So I'm only really expecting something if we get a beat in these PMIs. Remember, you get kind of the French and the German and the Eurozone come. So don't just zone in on the euro reading. It's the French and the German data point is arguably the most important, because Germany is the largest contributor to the European Union. We want to see a result from Germany, which is likely to have the biggest impact. So be aware of that coming at 8:30 a.m. GMT. And with the refinancing rate, that's coming out 12:45. So that will also affect expectations for the rate. Don't forget the press conference afterwards, because at the press conference you'll often get you'll get the statement will be explained in more detail. So if the market overreacts or underreacts to the statement, the press conference is a time to put that right. So you've got to see those events not as one event. You got to see both of these events as one event, okay? And there's two halves to that event, but it's still the one event. And then you only want to make your trading decisions out of that once you've seen the final press conference. Okay, so you might make a trading decision at here, but you're conscious that at 1:30 that might change. Okay, so just be aware, see those two events as one and the same together. Now the other major thing to look for, okay, I would obviously look at services and manufacturing PMI for the States at the moment. That's quite key. How we saw some ISM manufacturing data really moved the US dollar a couple of weeks back, so keep an eye on US dollar manufacturing. And the other main issue here is looking at the US-China trade deal. Now, originally Donald Trump said that he didn't want a multi-stage trade deal. He wanted to just get the deal done in one chunk, as it were. But he sort of tracked back from that. And that was mainly because, as I said about the ISM manufacturing data out of the US, concerns about the US slowing down have been weighing on global growth concerns quite heavily. And what Donald Trump has done, him and President Xi have agreed a phase one deal. Now, that phase one deal has not been signed yet. It's due to be signed in November. So what we're looking at this week is we're looking for further developments on that deal. So if the deal looks like it's going to be signed off, which it does at the moment, and if both countries are saying good, positive things about one another, then that is positive for risk tone. If they start saying things that are, not positive for one another, then in that situation, we're going to see risk tone fall off. Now, there's a phase one of the US-China trade deal. There's also phase two, potentially phase three. So the thing to start looking for phase two is any talk on energy. That's going to be a big issue, as well as intellectual property. Intellectual property rights has been one of the main sticking points of the US-China trade war, because the US has been concerned about intellectual property rights, and the US has felt that the intellectual property rights have been stolen by Chinese businesses and companies. So that's kind of one of a big sticking point. So look out for anything on intellectual property. It has the potential to move the market. We've also, remember, the phase one of the trade deal was all about the China buying sort of 50 billion US dollars of US agricultural products. So that's affected soybeans, because prior to the US-China trade war, the China would import about 10 billion US dollars of soybeans. That's why soybean prices have risen, and that's just to be aware of that. The impact from the trade deals and the impact from on different commodities and different products linked to this. But obviously, the big issue between US and China is global growth, because if US and China have a trade war against each other, between those two countries, they constitute 40% of the world's GDP. So it will bring down the whole global economy. That's the concern. That's why we've been seeing equities falling and risk assets falling on any indication that the US-China trade war dispute is getting worse. At the moment, we're in a good frame. We're in a good place. There's optimism. That's why we're seeing some risk sentiment on. We looked at this morning, we can see, all the European indices are in the green, Asian indices are in the green, and I'm looking at the S&P 500 futures market and the Dow futures market. Both of them are in the green. So it's looking like risk is on for this coming week. Obviously, that will be impacted by Brexit. So one interesting thing to note is as Brexit issues were getting ironed out at the end of last week, there was a rally in equities. So it was just interesting to see that the whole global economy will be relieved if Brexit is sorted. So it kind of can spill over to other markets. So just to be aware of that, if we do see the withdrawal agreement voted on and passed through, I would expect a strong risk on sentiment. So I'd expect a strong risk on rally in equities. And, then you could potentially have quite a bullish risk on sentiment, because you've got Brexit sorted, you'd have assets, equities rising, and you'd have the optimism of the US and China getting a trade deal done. And all of a sudden, we could be back to where we were, sort of a year and a half, 2 years ago, and people feeling optimistic again. So that's where we are. That's the key issue. So just going through this week, it's the retail sales, business outlook survey out of Canada, Euro services, and manufacturing PMI, then obviously the ECB main rate. Look at the policy statement, and traders will be looking at the policy statement for clues as to the future path of the euro. So if there's anything negative or dovish, then the euro is going to be more likely to be sold off. If it's more positive, then we're going to see the euro being bid. So that's likely to affect the sentiment and the mood of the market, depending on what's being said. And then, of course, we've got the US-China phase 1 trade deal coming up as well. So, those are the key issues for us to be looking for. We've covered that. Don't forget that with HYCM, they do a special offer here that if you deposit this amount into your trading terminal, you get a 1-hour coaching session with me. If you deposit that amount into your trading terminal, you get an hour coaching session and a 1-hour trading follow-up review with me. And if you deposit $10,000, you get a 2-hour session, a 1-hour trading follow-up review, and a 1-week VIP support. So these are the offers that HYCM have. Don't forget, because in case you're putting money into your trading terminal, don't forget that if you do that, you qualify for these offers. So just remember that. It's worth being aware of. And also, this isn't money that you pay for. This is just money this is your money that you deposit into your account. Once again, apologies for the slow start today. As again, I had some technical issues, but hopefully they'll be sorted out now. And don't forget, tomorrow 1 o'clock to 2 o'clock, that I've got the workshop with myself, and we'll be looking at actionable sentiment. So in other words, how do you work out sentiment, and then how do you action it to choose currencies to trade on a day-to-day basis? So tomorrow will be very practical, and we'll look at which currencies pairs to trade and how to go about making those decisions. And you'll see how I go about them, and then you can make those decisions for yourself. Okay, guys, thanks for coming along. Apologies for the technical issues, and I hope to see some of you guys tomorrow 1 o'clock to 2 o'clock. If you can't make it, don't forget that it is recorded. Okay, thanks now, guys. Take care. Bye.